Right. Good morning and welcome back to the Europe Open. It is around 2:30 a.m. Eastern as we speak right now. And as far as the trading room is concerned, it's been a lot of left and right, but we've added quite a number of positions in the currencies, metals, and crypto segment, including euro, pound, dollar JPY, major currencies. Gold, aggressive longs again initiated, and on the other hand, Ethereum has been added uh, onto our trade list as well. Right, so quite a few charts to be reviewed in this session. Let's get started off with the Euro USD as usual. Now the sell-off continues, but the big question now is it going to be is it going to test around 300 levels, 1.03, or is it done? As discussed earlier, could be wave three in the making, extended wave 3, 4, and 5. And as an alternate count, there could be possibly 5 complete here. That alternate count could be A, B, and C, and zigzag possibly. There are two important Elliott channel lines which are passing. The first one I'd like to connect a potential ABC. Now see this area. It's testing the Elliott channel support trend line right now, and it looks like it is also finding quite a bit of bids right now. Right from 1.0482, it has bounced back to 520 in just a matter of about 15-20 minutes. So one of the reasons why it could turn from here is a short-term Elliott channel passing. The second reason is you can see more clearly on the hourly chart, the RSI is producing a good amount of bullish divergence. That is a strong bullish divergence you can see here. All right. And the third reason why we would still ask you to go and buy euro, or if not buying, there is no point in selling right now. Stay aside for a while, and then watch out for a reversal. That is a corrective reversal, and then go long. Now, this is the bottom line for conservative traders. At least push about 0.0571 would clear the path. First signal that the bulls are going to be back in control. Now, the major Elliott channel which is being tested is on the weekly chart. I'm going to keep the smaller channel as it is, and look at the larger picture. Of course, it is against what is happening in the market right now, but most of the time we've been trading in that manner, where most of the traders we like to go against, along with the tide that is being that's been going on right now at the present moment. All right, so look at that 5-year Elliott channel being tested right now, along with the short-term 4-hour chart as well. So we might not have yet bottomed out. I mean, daily chart is far away from providing a bullish reversal signal. I mean, it is too far away from that. But the big question is, are we just beginning to cut loose on the north side? The answer could be yes. Now, each time we send a signal in the room, Of course, we've had a tough 4 weeks, most of the instruments except gold. But then each time we send a signal right now, it's all aggressive. All right. So if you're not comfortable with that aggressiveness, you might want to stay aside for a while, wait for the first resistance or support to be taken out. Support in case of the dollar index. We'll bring up the chart in just a moment from here. And then prepare to go long, but this is not a time to go and short the euro. I mean, it would be a havoc, right? At least if you are not comfortable taking an aggressive stance, you might want to stay aside for a while. Right. So the trade plan, the euro is now coming up on your screens. We've just added euro again yesterday around 1.05 3035. Right. We've again initiated longs from 1.05 3035 zone. Recommended stop loss is around 1.0330. It's open. That's the first instrument for the day. Let's push it in the room here. All right, dollar JPY, we just initiated shorts again right now before coming into the room. Let me bring up the chart here. This is what is quite a bit replicated in the dollar index as well. Point number one, of course, we are hitting new highs every single day in the dollar index. But what is more significant is this fan. Look at the other side. And it has been a consistent bearish divergence that we've been seeing in the dollar index, with each high being print out there. All right, that's the first reason why we have initiated aggressive shorts. And the second reason is on the daily chart. You can see here, the RSI is just about the same price where we were around March 2022, and the price high was 99,136. And look at this, almost 103.56 now, almost 400 points higher. And then you have the RSI at the same level. Now that may not be an aggressive bearish divergence, but it is still a potential divergence scenario. It is very, very, very rare that prices are going to go higher from here continuously. You can see the price action from 99.30 to 103.50, and then the RSI stays flat. This occurrence is definitely, if not an aggressive, it is an indication of a potential bearish reversal ahead. All right, we still don't have a confirmation, but it's not going to take more than 24 to 48 hours to bring up one, if at all it has to. All right, and that's the way, that's the reason why we have been aggressively selling dollar index. But still an aggressive call. If you want to stay aside with the conservative approach, let that support be taken out first, 102.71, and then you can go and sell on rallies. But if you can find out a head and shoulder reversal pattern as well, that's a left shoulder, right shoulder combination, and then you can go and sell around 103.12 after that. All right. At the moment, the trade setup in the trade plan in the dollar index, which we took just in the Asia session, is coming up on the screens. That's an aggressive sold again around 103.30. Taken 100 points of risk. Remains open. There are divergence across the board right now. Watch out for the end of the April series tomorrow. And if you go by the records, at least 8 out of 10 times, major tops and bottoms are covered around these times. All right, let's move on to the next one now. Pound. What a story it has been carving here. Of course, it has taken its own time to bring up the Fibonacci 61.8% mark. I'm going to straight away bring up the daily chart for you guys. And it's good that we initiated long yesterday, again around 1.2530 mark. But look at that daily chart. I mean, this is a wonderful story where we can simply count 5 up, followed by 3 down. That is the impulse wave, March 2020 lows until 21 May 21 highs, impulsive 5-wave rally, which is being followed by a zigzag. I don't know if the channel is also supporting. Let's check out. If we try and do the Elliott channel, uh, might be just all right. It's not exactly testing. It's dropped quite a bit, but that's a 61.8 support, which is more importantly being witnessed as a great support for pound at this point in time. All right. So all in all, I would say that, okay, it's a 5 up followed by 3 down. Ideally, it's going to go 5 up from here. And it is too early for confirming right now because we're just around the bottom. There's no lower degree 5-wave rally which is seen right now, but potential remains for prices to print above 1.4 in the next several trading months, actually. This could be a lower degree wave 1, I don't know yet, but it could be labeled as a lower degree wave 1 and 2. Let's check out. No, that's the first low around 1.2495, and it's beginning to cut on the north side now. It has to break above the first resistance around 2600. Confirm that pulls up, coming back in control. At the moment, the trade plan for pound remains on the long side aggressively. And here's the setup. We've initiated longs from 1.257080 and 1.253035. Stop we intentionally kept below 22 as a support up there. It's quite unusual, but if we are right in this scenario for all the aggressive trades that we have taken, the next 4 weeks, that is May, is going to be a wonderful potential series for us. Dollar JPY, is it done? Possibly. We don't have a confirmation yet, but it could be possibly done. We are still far away from a confirmation. But then look at this. All right, that was a previous swing high, and then you had a corrective zigzag, a 3-wave movement, and this is a new high. Okay, quite understandable. Look at the other side. Wave 5, the 5th waves are normally accompanied by a diverging RSI on the screen. So that's what we are seeing right now. Again, an aggressive stance has been taken around 130 with that stop around 131.50. That's 150 points of risk based on this divergence scenario. I don't know if you can see the same on the daily chart, but let's check out. You see that the previous swing high was here, and then a corrective decline, and now a new high. RSI is nowhere seen near the previous peak. If it has to occur, this is the right time, right? So holding on to the aggressive shorts once again. It's two things that we are betting on right now, the diverging scenarios in the RSI and absolutely overbought and oversold territories. The target remains open. Conservative traders, you might want to stay aside for a while, and we'll be confirming once the major supports and resistances are gone on all the instruments that we are discussing right now. Dollar JPY needs to clear 127, 126.95 to get the bulls out of the way right now. Next, gold. Amidst all the noises, the gold has been a wonderful, wonderful instrument for us, ticking out on the upside and keeping the scorecard moving into the room, right? Of course, we've got a few hiccups here, but that is fine. It is a part and parcel of the trading nature that we are into, or trading business that we are into. This is the count first, major one, primary pound, sorry. That's the elite impulse drop, which we are now working on. A retracement was expected. We saw the retracement in a wonderful ABC corrective manner. More or less 1998 is a major top which is looking in place now. We've got an impulsive drop again. So after the 5-wave decline, now this is the 5-wave decline, the new boundary is formed. Maybe one of three could be labeled as one of three actually. Probably labeled as one of three, and the next move would ideally be to carve a 2 of 3 back into the 1960s. All right, so a couple of counter trends. It is not easy to catch a counter trend. We've been always vouching that, but when we catch it at the right time, it looks like this one is going to go above 1905. Now, conservative traders might want to wait for a break above 1905 or 1910 before taking a call on the counter trend rally. If you're an aggressive one, we just bought around 1876. It's a couple of hours back. All right, so the trade plan in gold again coming up on your screens. An aggressive stance that we've taken again. Remaining limit has not passed. We were ready to buy around the 1870 mark, but that has not occurred. But still wind it down. Around 50-60, that's what we're looking for, 1950-60 as a target. And it's a reasonable target according to the wave theory. Let's see how price action is panning out to be in March. All right. And now the cryptos, Bitcoin and Ethereum. I'm going to replicate the trade that we discussed yesterday because the story remains absolutely unchanged for now. That's the first potential impulsive drop between 69 and 33, which we've already seen, and a potential combination WXY is being called. For simplicity, I've labeled A, B, and C, but it could be 3-3, maybe a 3-3-5. Sorry, 3-3-3 again. So the first wave A, 3-3-3 is never an A, it's a WXY again. So it's a combination which is being worked out. Just for simplicity, I've labeled this as wave A and that as wave B, corrective decline recently. It's found a Fibonacci 61.8% support right now. We need to see a push at least above 40,500 and possibly 43,000 to clear the way for bulls for the next leg higher towards 55,000. All right, so the trade plan for Bitcoin remains unchanged from what we discussed yesterday during the Europe Live. I'm just going to replicate the one into the room. All right. And on the other side, if you go to Ethereum, it's again the same story. Believe it or not, the boundary which is being worked upon is between 48.50 and 21.40. See, 50% retracement has been made, but then is it only wave A? Possibly yes. That's the 61.8% collapse retracement, and possibly we are going towards the 61.8% Fibonacci retracement around the 40,000 mark, 3,800, 4,000 mark, right? So be prepared for a rally. The bottom line remains 2,300 for this scenario, a bullish scenario to hold, and the trade plan for Bitcoin is now coming up on our screens here. Ethereum, sorry. We have bought from around 2880. Recommended stop is around 21. And target is 3,800, 4,000. All right. So we'll bring the session to a pause here. We missed the New York session yesterday, but today we'll send across the pre-recorded video session of the New York Open just in a few hours from now. And let's bring the current one to a pause. Let's see how the price action is shaping up. I'll be pushing through all the updates for all the instruments that we've just discussed. And the euro is inching towards an intraday high. Let's see if it has crossed 530. It's just doing it. The first resistance, we need to see a clearance above 568 from here. All right, to set the ball rolling on the north side. So it's going to be an interesting contest in the next few hours. I mean, we see an opportunity here. I mean, let's not be complacent and stay aside until the major things are turning. Let's go and take some aggressive stance out there. So let's bring the current one to a pause. I'll be back again with the pre-recorded New York Open after about 5 hours from now. Until that time, once again, thank you, Brother Innocent and Brother Michael, for being here online, as always. And for the others, if you're watching the recorded mode, during your convenient times. And as always, until the next one, please do take care and God bless. Goodbye.